Greetings, everybody. John Detton just said that Gary Gensler is gaslighting the American people. What on earth does he mean by that? We're going to investigate it right now to find out. So hold on a second. An important new turn has occurred in the protracted legal battle between Coinbase Global and the SEC in the United States, which is the immediate context of this announcement. Coinbase and the SEC have noticed a change in focus. Coinbase's petition for rulemaking was unexpectedly rejected by the Securities and Exchange Commission on 3 separate reasons, throwing the trading platform into a loop. One of these reasons is that cryptocurrencies are subject to the same securities regulations as traditional currencies. While it is widely acknowledged that the crypto securities markets are governed by the Securities and Exchange Agency, it is equally crucial to note that the agency has discretion over its own rulemaking objectives. Among John Detton's remarks in the letter issued by the SEC chair was the assertion that cryptocurrencies lack any inherent innovation or distinctiveness as a result of the inherent asset volatility in the cryptocurrency ecosystem and the current legal framework's categorization of all assets as potential securities. Coinbase has filed a request for rulemaking. During a hearing, Detton brought up the fact that the SEC chairman's testimony before Congress earlier this year and this position are completely at odds with each other. The comment of Gary Gensler, who said that the commission does not have authority over cryptocurrencies because of its unique qualities, leaves the American public vulnerable to gaslighting, as does Gary Gensler's endorsement for this position. According to what Detton remembered, Gary Gensler had made a statement. The author of this letter argues against Sears by saying that cryptocurrency isn't novel or unique and that existing regulations can be easily extended to them. According to Detton, he indicated that Gensler did not make such a declaration while under oath when he was last updated on December 15, 2023. The petition that Coinbase submitted relied on the belief of the SEC, which was backed by evidence from the agency's previous interactions as stated by the attorney representing the XRP holder. Since taking a different position on cryptocurrencies in the past, the head of the Securities and Exchange Commission has suddenly changed his mind. According to him, the move is driven by political considerations. In his corner was Senator Elizabeth Warren. The United States Securities and Exchange Commission has been sending mixed signals about its stance in the cryptocurrency ecosystem, either through statements made by the chairman or through its own actions. Despite being involved in a lawsuit with Coinbase and having purchased cryptocurrency securities, the regulatory body did not file a petition in its failed battle with Grayscale Investments over Grayscale's plan to turn its Bitcoin trust into an active spot exchange traded funds product. Though interest in such a product has been growing recently, the chairman of the SEC's recent statement that cryptocurrency is not a priority has raised questions about the industry's future, particularly with the approval window for Bitcoin exchange traded funds coming up soon. Shall we now examine the XRP chart after encountering selling pressure and resistance while trying to break through the 0.7 level? XRP entered a corrective phase that featured a retreat into an important support zone. A closer look at the daily chart confirms this, showing that XR pricing had a correction. Despite the psychological support from the 100-day and 200-day moving averages and the static support level of 0.5, XRP price volatility has been low recently, and the cryptocurrency is still contained within a critical range defined by the support level of 0.5 and the resistance level of 0.7. The flip side is that the 0.7 resistance level might be reclaimed if there is a rush in buying activity that drives up the price of Ripple. The reason behind this is that the price of Ripple has increased compared to earlier. The data came from a price chart in the XRP trading view. Looking at the 4-hour chart more closely shows that Ripple's rising price met strong resistance near the 0.7 level. A significant drop happened due to increased selling pressure in this important zone, which was characterized by a long retracement towards the Fibonacci levels. Despite buyers trying to push the price past the 74-cent mark, the retracement was unsuccessful. These endeavors proved fruitless because Ripple is presently undergoing a period of consolidation with minimal volatility. The current price action suggests that the market is uncertain. Despite this, there is strong support in the price range between the 0.5 and 0.618 Fibonacci levels. If XRP drops below this level, it could mean that a major slump is on the horizon. Market participants should psychologically prepare for major changes to come if this happens in a series of X posts. With a focus on the year 2024, Stuart Alderodi, who is the chief legal officer of Ripple offered some predictions about the future of the cryptocurrency sector. His estimate for 2024 centered on three main points: the continuing legal dispute between Ripple and the SEC, the role of the judiciary in establishing crypto regulations, and the possible legislative challenges that Congress would encounter. Once again, the time has come, and we have asked Ripple's top brass to provide their predictions for 2024 so that we can officially welcome our chief legal officer. December 15th, 2023 is the date of the Ripple event. In his forecast for 2024, US cryptocurrency legislation and regulation, Alderodi presents three bold viewpoints. Ripple's CEO Brad Garlinghouse and co-founder Chris Larsen were cleared of all charges related to possible violations of securities laws, elevating Ripple's standing in the industry. As a result, the value of XRP has surged by an incredible 83%. With 3 years under its belt, the cryptocurrency has been relisted by major US exchanges thanks to court victories. These developments showcase Ripple's resilience and innovation in the face of legal obstacles. Looking ahead to 2024, XRP predicts that events like Bitcoin's impending launch and spot Bitcoin ETFs will cause the market to experience growth. As the environment continues to change, Ripple is looking to secure a sizable portion of the central bank digital currencies market, which is estimated to be worth $5 trillion. Ripple underlined the fact that the revolutionary potential of CBDCs and stablecoins is becoming increasingly clear in a research titled CBDCs, the digital evolution of money. The paper also highlighted the fact that 98 of the countries across the world are moving forward with the project. CBDCs and stablecoins, according to Ripple, a total of 130 countries, which together account for 98 of the world GDP, are actively pursuing CBDC projects, according to Ripple. The United States of America, South Africa, and a number of countries within the European Union are currently in the exploring phase. At the same time, the report mentioned that 19 of the G20 nations are currently in the advanced stages of their CBDC initiative. China, on the other hand, has recently finished a pilot phase and is getting closer and closer to doing a full-scale launch. While this is going on, CBDC systems are already operational in countries such as Nigeria and the Bahamas, and their uses are continuing to advance. The Bank for International Settlements has forecast that around 20% of the world's population will have access to a CBDC within the next few years. This prediction is in response to the trend that has been seen. Ripple highlighted the systemic goals that CBDCs are able to help address, citing McKinsey as an example. Inclusion in the financial system, reduction in fraudulent activity, innovation in payment methods, and a new path for monetary policy are some of these. In addition, the Ripple CBDC research underline the fact that CBDCs play a significant role in promoting the good effects that asset tokenization can have. Using tokenization makes it possible to keep track of ownership changes and asset transfers in a transparent manner. It highlighted the advantages of wholesale CBDCs, which are suited for large-scale transactions, including securities and interbank transfers. It was said by Ripple that wholesale CBDCs improve operational efficiency by reducing the amount of time needed for settlement and increasing liquidity. That's all for now.